we are still working on exam 6A from Blackboard, doing a little practice, getting ready for our exam 6, which is going to be Tuesday, December 1st. Don't forget, come back from Thanksgiving, we'll have this exam. And I guarantee you, I will have on that exam preparing a retained earnings statement. So you need to be able to put a retained earnings statement together because it's important. It's one of the 4 financial statements. You have to do them. It's the one you do after income statement. All right, so in this case, we've got a company that has this information for fiscal year 2014, which runs January through December. And so they started out with retained earnings of this amount. They had net income of this amount. They paid out cash dividends, or they were declared. Maybe they paid them out, maybe they didn't. It doesn't really matter. If it's a liability, that's fine. It's still coming out of retained earnings. We've recognized it on the books. So we got dividends, $865 over the course of the year. So prepare that retained earnings statement. Well, that should be pretty easy. So when you prepare any of your financial statements for me, always put your title on it. That's always going to get you a point. Don't ever leave anything blank, for heaven's sake. So let's put our title on it. The first line of the title is the company. Right? Because as an accountant, you may prepare financial statements for a number of companies, or your clients may be investors and they may look at a number of different companies to invest in. So tell them what company this is. And this is Beach Time Inc. Right? And then you tell them what they're looking at. I've got a financial statement for Beach Time Inc. What is it? Oh, it's the retained earnings statement. And another very important time is to know what period, right? What are we looking at, right? Because every year is going to have one of these, or possibly every quarter. So what are we looking at? Well, we're looking at for the year ended 12 December 31, 2014. All right, so there's a point right there. Don't leave things blank. All right. So the point of the retained earnings statement is to calculate the new retained earnings that's going to go on the balance sheet on December 31st. So retained earnings January 1st started out with that. And basically you add your net income, you subtract any dividends you paid out, and that gives you your new retained earnings. It's really pretty simple. New retained earnings is old retained earnings plus net income minus cash dividends. Or stock dividends, just minus dividends. All right, so let's go ahead and do that. All right, so we got our heading here. So the first thing is retained earnings January 1, 2014, 15,600,000. All right, easy. Just take it right from there. Then you add your net income for the year, and it is 4,750,000. I suppose on the exam I might put it in different order or something, but I mean, this is a pretty simple statement to do. There's no reason not to be able to memorize how to do this one. So net income 4,750,000 less cash dividends declared, so less dividends of 865,000, right? And that equals increase in retained earnings right? So if you take 4,750,000 minus, right, less dividends, 865, you're going to get 3,885,000. And old retained earnings plus the increase in retained earnings equals my ending retained earnings, or what we call retained earnings December 31, 2014, which total 19,485,000. Double line, because we're done. It's just that easy. You'll basically have retained earnings beginning, net income less dividends equals increase in retained earnings, old retained earnings plus increase in retained earnings equals new retained earnings. It should be very doable. It'll look pretty much like this. You know, different numbers. They all look like this. All retained earnings statements are just beginning plus income less dividends equals new retained earnings. I can't make it any simpler. All right. Good luck with that.